Hi, in this video we will recapitulate a few journal entries which are specific to partnership firms. It has been divided or assorted under various heads such as capital, drawings, interest on loan, rent paid, appropriations such as interest on capital partner salary, transfer to reserve, also the income of the firm which is interest on drawings, and the journal entry for transfer of profits or distribution of loss. So let's begin with the head capital. There are two journal entries associated with this head. One is for additional capital introduced and the second is for withdrawal of capital. The journal entry for additional capital introduced. Bank account debtor to partner's capital account, being capital introduced by the partner. Remember, irrespective of whether the fixed method or the fluctuating capital method is being followed, the additional capital introduced is always credited to the partner's capital account. For withdrawal of capital, it's a reverse entry, partner's capital account to bank account. Irrespective of whether fixed or fluctuating method is being followed, the partner's capital account will be debited when the partner withdraws from capital. Next, the journal entries relating to drawings. We have divided this into two. Every time the partner withdraws from the profits for personal use, so every time a drawings is made, this is the journal entry, drawings account debit to bank or cash account, since the cash goes out of the firm. Now all the drawings made by the partner is added up, and at the end of the accounting period, this drawings amount is transferred to the partner's capital or current account, and thus the drawings account is closed. The journal entry for transfer of drawings to partner's capital account or current account is partner's capital / current account debit to drawings account. Depending on whether if it's a fixed capital method, it is current account, and where the fluctuating method is being followed, it is partner's capital account which is debited. There are two items of charge over here. The first one is interest on loan and the second one is rent paid to partner. We'll focus on interest on loan first. Journal entry: when the firm borrows a loan from the partner. Bank account to partner's loan account. When interest on loan is paid or payable by the firm to the partner on the loan borrowed by the firm. So where the interest on loan is actually paid to the partner by the firm, cash goes out, the expense is interest on loan, and therefore the journal entry is interest on loan account debit to bank account. Where the interest on loan is payable, it has not yet been paid by the firm to the partner. Name of the expense which is debited is again interest on loan, but it is credited to the partner's loan account. And finally, at the end of the accounting period, interest on loan, being a charge against profits, has to be transferred to the profit and loss account, and journal entry for the same being profit and loss account debit to interest on loan account. Now we just learnt three journal entries with respect to the firm borrowing a loan from the partner. Now we'll just revise a few entries when the partner takes a loan from the firm. Now when the partner takes a loan from the firm, the partner has to pay interest on the loan to the firm. So from the point of view of the firm, the interest on loan is an income. Depending on whether the firm gets the amount, you debit bank account, or if the interest is payable by the partner to the firm, debit accrued interest account and credit the income, which is to interest on loan. And this income has to be transferred at the end of the accounting period to the profit and loss account by the following journal entry, which is interest on loan account to the profit and loss account. Being an income, it is taken to the credit side of the profit and loss account. So we've revised the journal entries when the firm borrows a loan from the partner and also when the partner takes a loan from the firm. Next, the partner may give the firm the use of his premises, for which case rent has to be paid by the firm to the partner. Journal entry for rent paid is rent account debit to bank account. The rent is actually paid by the firm to the partner, where the rent is payable to the partner for use of partner's premises. Rent account debit to partner's capital or current account. Capital account for fluctuating method and current account for fixed capital method. And finally, the rent, which is a charge against profits, has to be transferred to the debit of the profit and loss account by passing the entry profit and loss account debit to rent account. Next, for transfer of net profit from the profit and loss account to the profit and loss appropriation account, the net profits have to be brought down to the credit side of the profit and loss appropriation account by passing the journal entry profit and loss account debit to the profit and loss appropriation account. Where there is a net loss, first of all, we should remember that the net loss is transferred to profit and loss appropriation account on the debit side only when there is presence of interest on drawings. Where there is no interest on drawings, net loss is directly distributed to the partner's capital or current accounts directly from the profit and loss account. So where there is a net loss and there is also interest on drawings, the journal entry for transfer of net loss from the profit and loss account to the profit and loss appropriation account is profit and loss appropriation account debit to profit and loss account. Let's go to few appropriations. Interest on capital. For allowing interest on capital, journal entry interest on capital account debit to the partner's capital or current account. And the interest on capital has to be transferred, being an appropriation, to the profit and loss appropriation account, journal entry being profit and loss appropriation account debit to interest on capital account. Next appropriation, partner salary or commission. For allowing partner's salary or partner's commission, journal entry partner's salary or partner's commission account debit to partner's capital or current account. At the end of the accounting period, it is debited to the profit and loss appropriation account. The partner's salary or partner's commission is transferred to the debit of the profit and loss appropriation account. Journal entry profit and loss appropriation account debit to partner's salary or to partner's commission account. Transfer to reserve. Reserve is also an appropriation. So The journal entry for transfer of profits to reserve is profit and loss appropriation account to reserve account. We may recall that the transfer of profits to reserve is done in order to meet any contingencies which may arise in the future. Therefore, it does not belong to any specific partner. So, it is not credited to any partner's capital or current account. Journal entries with respect to interest on drawings. The journal entry for charging interest on drawings, partner's capital or current account debit to interest on drawings account. Interest on drawings being an income is transferred to the credit of the profit and loss appropriation account at the end of the accounting period by passing the entry interest on drawings account debit to profit and loss appropriation account. And finally, the journal entry for transferring the profit or distributing the loss. Where there is a profit and it has to be transferred to the partner's capital or current account in the profit sharing ratio, the journal entry is profit and loss appropriation account debit to partner's capital account or current account depending on the fluctuating capital being followed or the fixed capital being followed. In the case of distribution of loss, it's partner's capital / current account debit to the profit and loss account or profit and loss appropriation account. We may recall that where the profit and loss account results in a loss and there is no interest on drawings, it's directly transferred from the profit and loss account to the partner's capital or current account. On the other hand, where there is interest on drawings, it is transferred from the profit and loss appropriation account to partner's capital or current account. So that's why I have put to profit and loss account / profit and loss appropriation account. So these are the journal entries which are specific to partnership firms. So each one has been dealt in detail.